Let's get a view from our next guest, who is Paul Dietrich, who is the Chief Investment Strategist of B. Riley Wealth Management, and he joins us from New York. Paul, great to have you on the show. Thanks so much for your time. Well, one of your predictions for 2020 that really surprised me and stays in the political arena, if you will, is the fact that President Trump could actually use a CPTPP type arrangement, go back to it, to try and exert pressure on China for the Phase 2 deal. Is this really a possibility, given how the administration has previously been so down on the TPP arrangement?
Yes. It's not because they want to. It may be because they have to. Most political analysts believe that the tariffs, especially against farmers and other products from the Midwest, were really hurting President Trump. And so he had to make a Phase 1 deal. But, you know, for those of us who actually supported his trade policies, trying to get the Chinese to stop stealing our technology, the forced transfer of technology, the state subsidization of state industries, and other systemic reforms, most people who follow this issue are really, really disappointed with this first agreement. But it will, on the other hand, we will have a year without tariff threats, because he's going to be focused just on the election. And so the people in the U.S. Trade Office who are negotiating this, they believe that there's a high likelihood that the Chinese are just going to slow walk this through the next 4 years, and that he's never, ever going to get the important reforms that most people that watch this really want from China. And so they're thinking of alternative ways to put pressure on China, and this is why it's coming up within private talks and strategies in the U.S. Trade Office to go back to the TPP, because if we went back in, we could try to isolate. It would be a containment strategy on trade to the Chinese, and they're hoping that that could put pressure on them to, negotiate a real trade agreement instead of this kind of joke trade agreement that we have now. They could have gotten this agreement a month after. All they've basically asked is the Chinese to buy the same amount of agricultural products they were buying in 2016 and 2017, and they have made some concessions to financial industries. Sure. We have no idea what the Chinese have promised on patent reform. It's not a good agreement. The Chinese clearly won this trade negotiation.
Yeah, and it seems so. And, the market's attachment was primarily to the tariff rollback, so which it got. And so, you got a bit of a rally in the works for the markets over the course of the last few sessions. But, Paul, looking into 2020, if the trade tussle is not something that the markets need to contend with, then what's the #1 risk for the markets in the coming year?
Well, I think next year, 2020, is going to be a good year. I mean, the U.S. is slowing. The economy is slowing. We went from about 3% last year, and we're going to go down, we'll find out next month, about 2% for this year. Next year will be 1% or less. I think that no matter who wins the election next year, no matter what party, they're going to face sometime in 2021 a recession. And you can see it through the leading economic indicators. But because we have full employment in the United States, because wages are going up, and 70% of the U.S. economy is consumer spending, we're gonna power through. And there's one other thing, is that, and this happens no matter who's president of the United States, and especially with President Trump, he is going to use every single lever of power that he has access to, including badgering the Federal Reserve to continue to lower rates, and he's going to push the economy so it's still booming through November 3rd of the election. The University of Chicago, someone said recently, if you pump enough money into the economy, you can extend an economic boom. You just can't extend it forever.
Well, yes, Paul, and sooner or later, I mean, many of the central bankers will start to worry about risks to financial stability if they aren't already. So this raises the question of, you may say that President Trump will exert pressure on the Fed to perhaps cut even further, but will they? I mean, the economic data doesn't seem to warrant it today. At least that's the message from the FOMC.
Well, yeah, I mean, if it was left up to the Fed, they wouldn't be lowering rates, but they could lower, 225 basis points over the next year. It would pump money into the economy. It would keep it going through the November 3rd election, and I don't think it will hurt the economy. I expect, and we're looking at, probably 10% growth in the stock market overall next year, but it's 2021 that if you just kind of track the leading economic indicators, which are the early warning signs of a slowdown or a recession, you can really see it coming in 2021.
Okay. Paul, stay on with us. Lots more to discuss with you as we go along on the show. So with Paul Dietrich from B. Riley Wealth Management. Paul, how did you read into the news of FedEx saying that, it's a tough environment for them, given slowdown in global trade and because of the contract that ended with Amazon?
Well, FedEx, unlike UPS, is having its own problems internally, and that coupled with the decline in shipping is really a problem for that company. But I do think that at least temporarily with the new trade agreement, shipping, or at least portions of the shipping industry, ocean shipping, railroads, that could be coming back, but I'm not sure that Federal Express is going to be the major beneficiary on that, and that's why they're being hit so hard.
Well, that indeed is the case. I also want to touch upon the Boeing story, because now that they're talking about suspension of production of the 737, and there have been news reports, in fact, I picked up a JP Morgan report indicating that that would impact U.S. GDP in the first quarter next year by 0.5 percentage points. Do you believe that the way forward is really, really bumpy for Boeing as they figure out a strategy in and around that production halt?
Yes, it has got to get its act together, and it will not only affect GDP in the United States, but people forget that there are really big producers in Europe and in other countries that are part of the supply chain of Boeing. And I think this is going to have a worldwide effect. People forget just how much of an impact and how broad the supply chain and the manufacturing base is for both Airbus and Boeing. And I'm actually fairly concerned over this.
Paul, does that mean stay away from the suppliers? I mean, we've seen some of the suppliers hit hard already.
Yes, I mean, even when they start producing again, there's going to be a ramp-up period. And I do not think Boeing would have made this decision had they thought that they could solve the problem sometime in the next first quarter or second quarter. So that means I think they're going to have real problems for the next year. And then for the supply chain, they're going to have problems this next year and the following year.
Paul, just very quickly before we let you go, we were looking at Apple's stock a little bit earlier at an all-time high here. One theme you're watching for next year is the 5G revolution, but many have been quick to say that Apple is kind of behind in the 5G trends. Is this negative for the stock?
5G is one of the great technological advances of our time. People forget that 10 years ago when we went to 4G and the Apple iPhone came out, replaced the BlackBerry, it created the app a sharing economy, and we had Uber and Facebook and Airbnb and all of these companies. It really brought Amazon to the fore. All of these things happened because of 4G. 5G is even going to be exponentially greater, and it's not just with cell phones and Apple. That's going to be the thing that most consumers feel so directly, but it's going to revolutionize healthcare. It's going to revolutionize smart cities. All that's going to happen next year. But I keep talking about the key elements of 5G that people want, which is the fast streaming. Apple's got it. Everyone I talk to says that they're going to be as fast as anybody else. And that's what people want. That's how people are viewing everything. And most analysts believe that once Apple introduces this new 5G, which is going to be on a new network, it's going to be the greatest sales thing because everyone in the world is going to have to upgrade to the new 5G phone in the next 3 years.
That's all the time we have for now. Thank you so much for joining us today. We appreciate it. It's Paul Dietrich from B. Riley Wealth Management.